morning, Patreon subscribers. It's really cold right now in the UK, but that's fine. It's nice and warm in here. It's just bitterly cold outside, so hopefully it doesn't get any worse than that. It's quite extreme for the UK. So that's indicating sell at the high level, and it's a little bit sideways in the dollar Swiss. The sellers are in control, so we can potentially come down and get that stop loss cluster. Yeah, I think it's going to be inevitable because it's large. It's the largest stop loss cluster that we're looking at in the quasi-DB system. So we are quite close, to be honest with you. Yeah, we're 46 pips away, and then potentially that might be the bottom. But you'd kind of want to be targeting support, really. It's not unusual to surpass monthly support 1. It's not that unusual. So I don't know. This is just being propped up due to uncertainty. Those yields are going to be spiking today as we go into the CPI, and the VIX pumped as well. And that's going to support our USD. So it might explain why this has been fairly sideways, a bit buoyant, because the dollar is going to probably appreciate due to that uncertainty. And the rumor is that the PPE, because that came in hotter than expected, it might reflect into the CPI. And if we have a hotter than expected inflation, then it's going to be quite risk off, I think. And we're going to see things like the Australian dollar USD that can fall, because the Australian dollar is definitely more risky than the USD. We are set the big picture, and they've gone long. The buyers are in control. The stop loss cluster below is large, 67.25, 68. So that's possible, likely. It all depends on the outcome of the CPI. If it comes in softer, this is going to rally, and commodities will rally as well. And this obviously has got a connection to commodities like copper and gold and things. So be careful. And iron ore, but no one trades iron ore. Yeah, so that's a tricky one. It might want to come down and get the stop loss cluster and then bounce. And that's, yeah, it's hard to say, isn't it, really? Let's look at EU. Now, this had better volume support. If you saw the analysis in Discord, go to the Euro channel. Like the dollar Swiss, it's just going a bit sideways. One above is at 106. It's easy to remember. At 105. All right, so, flip a coin. It might want to get both. It's only 100 pips. The ATR on this is going to be quite extreme today. We are a buy. The buyers are in control. Remember, these are the smart traders. It's possibly going to be a bi-directional stop hunt. So be careful. GU. And then lastly, I'll show you the dollar yen, which is something I'm looking at on the H4. So this is the better volume support. You can just draw these on your chart. It's quite simple. Go to indicators, custom, better volume. And then we just basically map in, red is buy and white is sell. So that corresponds to the buy-in. See, that red corresponds to there, and then that's it, really. So it's very, very simple. So that should be a good support. We are a buy sideways, but they're selling slightly over time. Yeah, it's a sideways, isn't it? And the SLC above is at 123.57. One below is at 121. And then lastly, we'll look at the dollar yen. And if you can hear my central heating, I apologize, but it's very, very cold right now. Dollar yen is a buy. They have sold it, and the buyers are in control, but it looks like we might be getting like a crossover. One above is at 138.04 at 136.40. Now the thing is with the dollar yen, even though it's a buy here, technically you could probably argue you've got a bit of resistance. We've got that selling volume candle here, which corresponds to that candle, and I've done the fib, so it's a theoretical entry there with a stop loss there and a TP potentially at 1R, ideally 2R, but because it's sentimentally it's a buy and they've been selling it, we can probably test this zone. And the CPI, we can maybe rally like crazy on this one, because those yields are going to pump, and this tracks the 10-year very, very well. The 10-year pumps 3%, 4%, which it can do. This is really going to rally, so we've got to be really careful This isn't a trade recommendation, it's just an observation on the better volumes. On a normal day, this could be a decent short, but we have to remember technicals as well. And this is your sentiment, sorry, but this is technical. So potentially below 136.97 to target 135.60. Ascending pitchfork and ascending shift channel. So there, you can see if we go below this, we'll target this trend line. Then we'll target the horizontal, and then we'll fall. And then what will happen is we'll create an M, and then it's going to be a buy down here. So it's going to create, I think it's going to be like a bit of a, it's going to be a Gartley, but might be a crab. If it's a crab, it needs to break that. So we've got potentially a scenario where if it does fall, it could be a good entry. Maybe here or here to target there, where I think it should break below that in order to complete this M pattern. I don't know if you can see there. Hopefully that's clear. And so we've got bearish OBCD as well on. So that would be a resistance up there. It's very, very far away, and this is only an hourly chart as well. So be careful, and I'll be back tomorrow. Just maybe monitor today, to be honest with you. And I'm around if you need me. I won't mind at all. So we'll have to wait and see what happens. That's going to be resistance there as well. So be careful. I'll speak to you guys soon.